Good morning and welcome to another ACY Securities market update. My name is Alistair Schultz and I'm here today to be your host through today's trading journey. Now, the first thing that we're going to be looking at is actually the cash rate adjustment that we saw overnight. Now, yesterday the RBA announced they were going to be dropping by 25 basis points, and we had an unexpected emergency announcement by the Fed where they dropped 0.50 basis points. We can see the cash rate change on here. So now it is sitting at 1.25%, moving ahead. Now, the effect of this has been pretty broad and especially on dollar-based pairs, and you were seeing stuff that was not likely to be expected. Now, in the Fed case, we saw price drop, and we saw markets relating to the US dollar all dropping as well at the announcement of this release. Yesterday, however, when we saw the Australian dollar and their Reserve Bank announcement that they were dropping and cutting the rate, we saw price go up. So what is the difference and why is it happening? Well, what I can say from a first-hand point of view is that I believe there is a lot of psychological factors going on at the moment when it comes to trading in the markets. Because of all the impact of coronavirus and a variety of other factors that are going along the way when people are thinking about it economically, we're seeing a fair bit of fear and then the greed factor kicking in as well. So bear in mind that there is some psychological component to the trading at the moment, and that your usual methods of trading may not be as predictive as you would hope them to be. Now, when we talk about policy change and stuff like that, we can see all these pink countries on this chart that I've got just here are indicating where rates have been cut so far. Now, we are expecting more cuts to come in the future. Now, the rate that came out from the Fed overnight, straight after a G7 meeting, where all G7 meeting partners have discussed supporting their economies and doing a controlled setup of each one doing a cut on their own. So we are seeing central banks sort of uniting together to try and boost the world economy and not just their domestic economy at the moment. So what did it look like on the charts? So here is a gold chart that I've got here for you. It's an hourly chart, and we can see where the Fed has actually put a rise. We've got a big spike on the candles just here where price has moved up against the US dollar. So this is something that were not unexpected. Now, if you also notice on this chart, I've actually marked out for you a double bottom pattern that did occur. So if you were watching and you caught this a little bit early, I don't actually think it would have made the difference, because where we actually wanted to have our entry price was smack bang about a quarter of the way up this big candle. Now, if that was the case, then you would have had to have been moving very fast or had pending orders in place already. Now, looking at the S&P 500, we have seen stocks sliding at the news that's come out about the Fed and what they've done with the interest rate. So now, as you can see, we had that slight gain the other day. Now, this is the 9th day of losses for the S&P 500. And it is probably going to continue in my book. I have put up a Fibonacci retracement for you to have a look at, and you can see where price is reacting around the support lines at the 23.6, the 61.8, and of course the 38.2% range. In addition to that, we do have a little bit of a pattern occurring here. It's not actually officially anything, but it does kind of look like a triple top just in the reverse side of it. Now, I am expecting to see more slides down throughout the rest of the week, but let's see how we go. So overnight we had these unexpected FOMC announcements. They did come out at 2 a.m., but regardless of that, they weren't scheduled, so you wouldn't have seen them in the calendar, though they may have been updated to reflect that now. So for the day ahead though, we have at 11:30 a.m. Australian GDP for the next quarter. Now the previous was 0.4%, the expected is 0.4%. I personally don't believe we're going to hit that expectation. I think that we will likely see a slight contraction, but we'll see at 11:30 today. At 12:15 a.m., we're going to see the US ADP non-farm payroll early estimates. Now, they are expecting for 170,000 new employment figures, but the previous was 290, so it is a marginally step down. Now, is that an impact because of coronavirus? And is this what the Fed has actually based their decisions on for cutting rates? I'm unlikely to believe so. I think there are broader things at play. Now, at 2 a.m., the next piece that is going to be interesting is that one of the G7 members, the Canadians, are going to be having a rate statement at 2 a.m. I think we are incredibly likely to see a rate cut of some kind at that point there. So if you're trading the dollar CAD or any other related pairs to the Canadian dollar, then be wary of what's going to happen in the future. Now, of course, there's always going to be more content from us, but if you want to get in contact with me about anything we've covered today or in the past, feel free to send me an email to talktoal@acy.com. And of course, like and subscribe the video so that you can get more great content from us in the future. Have a good trading day ahead.